Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video.
Well, good day, everyone. Ira Epstein, and here we are on Friday, the 24th of June, 2011. The time's getting on about 3:15 in the afternoon. I hope you were watching me today when I was on Kudlow this morning at prime time around 10:40. It was interesting because they had called me yesterday and they wanted to know before I even came on, what did I think of gold? And I said, I'm bearish. And here you are down $18 today. Silver down back to the 34. Silver can go into the challenge those recent lows at 32. Let me give you a caveat I want you to all think about over the weekend. Your problem is, in part, the Greek vote. Which way is it going to go? Do not believe that because the Greek cabinet, the EU and the IMF came up with an agreement for a 5-year austerity plan that the Greek parliament is going to pass it. The Greek parliament vote is set on what these people have gotten together to say to do. The populace, this is very unpopular. What if they decide, the heck with it, we'll pull out of the EU? The heck with it, we'll default. I don't know the shock wave or lack of it that will happen on the market, but here's what I do know. Gold already knows this could happen, and it's falling. Silver knows this can happen, not that it will, and it's falling. If it doesn't happen, it's even more bearish for these two commodities right now. So I found that interesting. I found today's rally in copper scratching my head. Don't know why it rallied as strong as it did. Couldn't put that one together. I certainly can understand the uncertainty in the euro, a bit of a shift, if you will, to the dollar. The energy price, I'm never going to understand why they released the oil that they did the other day. I don't get it. You want to do that, you did it when we went to the Libyan situation with NATO. I don't call it America's war with Libya. You do it then. What did they accomplish? I have yet to figure this out. And I just watch what the market's doing because I think it's trying to figure out what they did yesterday. This is the gold-silver ratio, and for the longest time I've been showing it, and I'm going to continue because it's going to lead us to something. This is a market that is going totally sideways. Up here is when the market started off, when the gold was taking off, and then silver began its advance in price. And you needed less and less ounces of silver to buy an ounce of gold. Well, that was when silver got near $50 an ounce. And then after that, the market has since rallied, and silver's stuck back in the $34, $35 an ounce area. And you still need a lot more ounces of silver to buy gold. The market's buying time. Not sure where it's going to go with this. Let's go to a gold chart, because I know that a lot of you aren't happy that I'm bearish gold at this point in time, but I'm a commodity broker. I'm a guy that looks at a market, and I don't care what it is. Cover the name of the chart. This chart just doesn't look bullish. When I look at the chart, you're under the 18-day average of closes. It was the problem when we got up to this high that we didn't follow through any higher, and then we took out 1522, and that's all of yesterday. This is not big-time history. So I'm looking for any advances to the 18-day average to have what? Resistance. Why? The most recent pattern is that of a lower low, and I'm going to look on the rally high as long as it doesn't take out 1559.30 to fail and the market to set up a pattern of lower highs and lower lows. Didn't get that today. All you're getting today is a big break, an additional big break in the market. Let's add to this chart some moving averages. Now yesterday, the 45-day average of closes tried to hold the market. And this is the blue line right here. This green line's the 100-day moving average. If you watch CNBC, Bloomberg, Fox, I'm on Sky, Australia, you know, different traders talk about different moving averages, and that's fine. Suddenly the 150 days been talked about, the 250-day. Well, you'll find an average that works, but in futures what I've learned is the most common is the 18, and then after that some traders use a 21. Some use a 45 and a 50 for their medium. Others use a 100 or 150 day. These are the ones that I like and what I use. And when this if it should give ground and the market can't hold the market the way that it did back here, well, you're looking to either get to the 100-day average of close or potentially the Bollinger Band bottom right here. I want to stop here because this is so important for you. I thought that when the market was going up, right through here, this was where the market was going to run to the upside. I had told my clients, be bullish, blah, blah. The market finished, and this is Wednesday. And I'm going home and I'm going, this is all wrong. This market didn't push that band. It's going to back off. I looked at this and I said, what do you do? I had told my clients to get out, prove it, on the evening of Thursday night. They did fine, and they were long at nice numbers. I don't always win, by the way. This is what I wrote. This is what I wrote in my gold letter. I was giving reasons. Now you've taken out 1522. Now this was yesterday. You held the Bollinger Band. Now I'm nervous. The market is under the Bollinger Band, and what it's doing is it's taking this bit of a neck that it had, and it's starting to widen it out. I don't know what to tell clients here. Okay, this is a game where now, if you get bearish, you're not wrong to 1559.30, and I don't see a sell spot other than the resistance at 1534.50. And more important, why do I want to tell my customers to go into the metal markets that aren't holding up in front of the Greek vote? I got a real problem with that. So this is what you call a market that you look at, throw your brain away. You're under the Bollinger Band. You shouldn't be short under a Bollinger Band. The market's hit its downside target. It's widening it out. At the same time, the market is getting into oversold territory. Forget the market that you're looking at. You got 28 reading and 32. The trend is clearly bearish. Rallies look to me like potential selling opportunities if the market is not in oversold condition, or if the market converts from oversold into embedding the stochastic. You know, I talk a lot about this and the embedding and so on, but it's all, a lot of it is covered, not all, but a lot of it's covered in our futures trading kit, and certainly everything that I teach is covered in my trading school called the charting course. It's that simple. Charting course, made it a simple name, and I think that it teaches you the 5 steps that I think are important. But our futures trading kit, it contains an overview. Instead of a CD, it's a download, my friends, and you just download it. We send you an email. We send you the passcode so you can get into the charting software. It's yours free. If you haven't tried it before, 1-866-973-2077. Keep in mind, we're futures brokers, and that's the reason I'm here talking this. Let's go to silver. Get nervous. Get real nervous. Look at how long this neckline is and how narrow it is. And it's all doing this in front of this Greek vote and this Italian problem. I'm scared. You would have thought that if everybody's going to run for the hills, they'd be buying the metals. They're not. You've got to be careful here. If this market starts down from here, I still think you're going to go challenge these lows, if not lower. You are oversold, I admit that, but the pattern still is one of a lower low now, and the high, well, would have to take out this high to negate the market, which is around the 36.79 area, in order to negate this pattern. And the narrower this gets, this is what you call the potential of it's wound up enough for this market to do anything. I favor the downside at this point. Copper, like I said, I'm scratching my head. Copper fell down, held the Bollinger Band on both tests, rallied to the 18-day average and failed, but I wasn't expecting it to get over 414.65. It got to 415.75. You'll say, oh, that doesn't matter. Well, it does, because you got a pattern of higher lows now and actually a higher high. Yes, you're over the 18-day average. Nah, I don't know what to do with that, so there's not much to do. Here's another thing that's happened. Now, let's you and I take a look, because I've been tracking this for you, and we've been doing this together here. This is the difference between American crude oil and Brent, which is the world crude. We call American WTI. Brent is the world crude. The difference shows you how far it had gotten. This market used to trade, and I'm not talking very far in the past. I'm talking in a year ago. In the dollar range, $2 was a big number difference. It spreads itself out recently to 20, and suddenly it starts coming up. Now, this is Tuesday that I'm showing you. This is the market on Wednesday. This is just yesterday, and I'm telling you, and I know I said this, look at the tape. I said, you're now at the resistance zone. It's got to start making some decisions. Which way is it going to go? And this is what it did today. So you narrowed in already $6. I don't know how far it can go, but the pattern is one of higher highs, higher lows, and it's broken through the resistance zone that it had before. I'd like to see more of this, but it looks to me like we're seeing the two energies of the world get closer together in price. Maybe that's what happened when they released all these stockpiles, because I don't understand why they released these stockpiles of oil. You're oversold if you look at it in the crude, but first day of embedding the stochastic. The trend is clearly down, lower highs, lower lows, and you hit the Bollinger Band, you bounce away just a little bit, and you continue to go down. And here's the big boy, the Brent, and you can see it took this little bit of a sideways area. I would have preferred it even narrower, and it's breaking through. Now, this is not something that I would tell customers go short. You're too far into the Bollinger Band. However, there's nothing bullish on this chart at all. Spoken too much. I want you to have a good weekend. Remember about our free futures kit. You can just call in, or you've seen all the way through how you can go to our website and sign up for it. Love to get it in your hand, and it's going to be a busy week next week. Lots of things happening. You have yourself a good weekend. I'm Ira Epstein.